Hi everyone, hope all of you are doing great. Welcome to International Tax Academy by Manoj Naudiyal. I am Manoj Naudiyal, and today in this video we are going to discuss OECD's outcome statement that was released on 11th of July 2023. Now since February 2023, when OECD had come out with a detailed administrative guidance on Globe Rules Pillar 2, since February till July, there was a time gap of 5 months which did not see any document being released by OECD. So now OECD has come out with this outcome statement on 11th of July 2023, and the title of this statement is quote unquote outcome statement on the two-pillar solution to address tax challenges arising from the digitalization of the economy. Quite a mouthful, but this statement, at the very outset I would like to say that this is, although a very short statement, just 3 pages, but this statement nonetheless is significant in the sense that it indicates the progress that has been made by the inclusive framework BEPS-IF on the two-pillar solution, the progress that has been made till date, and it also gives a glimpse of the work that would be done in the near future. So what has been done till now and what can be expected in the near future. So it's a kind of a progress report, that this short 3-page statement. Fine. So let us discuss this statement. Okay. Outcome statement on the two-pillar solution to address the tax challenges arising from the digitalization of the economy. Right? So, outcome statement, right? So this is the outcome statement. Outcome statement, 11th of July. This outcome statement is divided into 1 plus 4 parts. It is divided into 1 plus 4 parts. This first part is a short introduction. And OECD says in this introduction that this outcome statement summarizes, I repeat, OECD in this short introduction says that this outcome statement summarizes the package of deliverables. This outcome statement summarizes the package of deliverables which has been developed by the inclusive framework, that is BEPS-IF. Fine. And this package of deliverables consists of 4 parts. So these four parts consist of the deliverables, right? So now I think it's clear why did I do 1 plus 4. So 1 is introduction and 4 are the deliverables. So introduction says that this statement summarizes the package of deliverables which is developed by the inclusive framework. Fine. So this is all about introduction. Right? Coming to the second part, that is the deliverables part. Right? So what is included in this deliverables? Let us have a look. Okay. Deliverables. So you have outcome statement, again outcome statement, right? You have outcome statement summarizes the package of deliverables, summarizes the deliverables, 4 deliverables, starting with the first one, number 1. So part 1. The first deliverable is a The first deliverable is a MLC, multilateral convention. MLC, multilateral convention, plus an accompanying explanatory statement to this MLC. The first deliverable is a multilateral convention plus the explanatory statement to this multilateral convention. And what is the purpose of this MLC? This MLC, along with the accompanying explanatory statement, this is for the implementation of so this is for the implementation of amount A pillar 1, amount A pillar 1, right? MLC explanatory statement is for the implementation of amount A pillar 1. What is amount A? Amount A is a new taxing right. It's a new taxing right. Based upon revised profit allocation and nexus rules. What would be the quantum? The quantum would be 25% of the residual profits. That is 25% of the profits over and above 10% of the revenue of the in-scope M&Es would be given. 25% of the excess profits over 10%, that is 25% of the profits over 10% of the revenue would be given to the market jurisdictions based upon profitability and revenue thresholds. Fine. So this MLC and explanatory statement will help those marketing jurisdictions which would be given this taxing right, new taxing right amount A, to exercise that taxing right. Right? Okay. So what are the elements of this MLC? MLC would contain the scoping provisions, the operative provisions, mechanisms for mechanisms for eliminating double taxation, mechanisms for ensuring tax certainty, and commitment not to introduce new digital service taxes and to revoke if any existing DSTs. Fine. So this is all what is contained in the MLC and the explanatory statement. Fine. Okay. As far as the progress is concerned, OECD in this outcome statement says that this MLC will be open. MLC will be open in the later half of this year, 2023. A signing ceremony would be held by the end of this year, and OECD expects that this amount A will enter into force in the year 2025. So OECD is of the opinion that this would enter into force in 2025. Also, one thing which is noteworthy is that OECD says that the inclusive framework members who all decide to implement this, who all decide to sign the MLC and implement amount A taxing, right? They have to make a commitment. Remember, I told you that no new DSTs have to be introduced. So this commitment will last from 1st of January 2024 till 31st of December 2024. Meaning to say that the signing jurisdictions will commit that between this period, that is full next year, they will not introduce any new DSTs, subject obviously to the progress being made in the enforcement or the implementation of this amount A. Fine. And depending upon the progress that would be reviewed, OECD further says that this period may even be enhanced till 2025. So meaning to say that the signing countries, depending upon the positive progress that would be made, they can even be asked to extend their commitment till the end of 2025, that by the end of 2025, till the end of 2025, they will not introduce any new DST. Obviously, the premise would be that it would be expected that by 2025, amount A would become operational. Right? So this is the first part of the deliverable. That is MLC and explanatory statement for the implementation of amount A, which is the new taxing right awarded to the market-based jurisdictions. right? Okay. Second part. that is the second deliverable, right? Okay. Second deliverable is again concerned with pillar 1. Part 2, it's a public consultation document. Document on amount B, pillar 1. Part 1, first deliverable was MLC plus 1680 statement for the implementation of amount A pillar 1. Second deliverable is a public consultation document for amount B pillar 1. What is amount B? Amount B is a framework that focuses upon a simplified and streamlined application of arm's length principle to in-country baseline marketing and distribution activities. Simplified and streamlined application of arm's length principle to in-country baseline marketing and distribution activities. Fine. So this is something which is traditional ALP. Fine. Amount A is beyond ALP. Part B, amount B is traditional ALP. Fine. So, and this amount B is very close to the heart of the developing countries. Why? Because developing countries, they face special challenges regarding the pricing of those activities, pricing of those baseline marketing and distribution activities, because local market comparables are often not available to them. Fine. So this amount B makes special mention of this specific requirement, specific need of the LCJ, that is low capacity jurisdictions. Fine. So this public consultation document would be available for comments till it would be released on 17th of July 2023. This public consultation document. This would be open for comments till 1st of September 2023. By the end of this year, OECD expects that they would complete the work on amount B, completion of the work on amount B, and then in January 2024 they would the completed report, which would summarize the entire work on public amount B, the report, that is amount B report, it would be incorporated, or parts of it would be incorporated, amount B would be incorporated in the OECD transfer pricing guidelines. Yes, this is something which is noteworthy, which is very important. So it means by early next year, if everything goes as per the plan, by early next year, you can expect, we all can expect, some form of addition being made to the OECD transfer pricing guidelines that would relate to the amount B. Fine. So this is public consultation document, and this public consultation document would contain the design elements concerned with the amount B, that is scoping and pricing rules, quantitative approaches to scoping, qualitative approaches to scoping, what would be the balance between them, then scoping for wholesale distribution of digital goods, and so on and so forth. Fine. So this would be available on 17th of July 2023. Fine. So part 1, MLC plus explanatory statement. Part 2, deliverable, second deliverable, public consultation document. Part 3, that is the third deliverable, which is these two were concerned with pillar 1. Third part, that is the third deliverable. Now I need to run. Third deliverable is concerned with pillar 2. Right? So third deliverable is concerned with pillar 2. What is that? Let us see. So deliverable, that is number 3 or part 3. This is, in fact, this contains 2 deliverables. Part 3 It contains a model, the deliverable, that is third deliverable, is a model treaty provision, model treaty, tax treaty, model treaty provision, plus the commentary, as well as MLI, not that BEPS MLI, new MLI, multilateral instrument, plus explanatory statement. Two deliverables in third part: model treaty provision plus commentary, MLI plus explanatory statement. And both of these are supposed to be implementing what? Both of these are supposed to be implementing, help in implementing a pillar 2 rule, which is known as STTR. That is, these two would help in the implementation of STTR, that is subject to tax rule. STTR, subject to tax rule. What is STTR? Okay, let us quickly see STTR as well. Tax treaty between two countries, R and S, two states, R and S, resident state R, S state, source state. RCO is the resident enterprise of RCO, of R state. SCO is a resident enterprise of state S. There is a loan, there is an interest payment, and there is a tax treaty. Under this tax treaty, there is a limit upon the tax rate that country S can impose upon this interest payment. This is a limit. So tax that S can impose upon this interest payment is limited under the treaty. Number one. Number two, the tax rate that R imposes upon this interest payment is less than 9%. Fine. Supposing so tax rate, R tax rate is, say for example, say 7%. Fine. So if both these conditions are satisfied, then S country can request R country to incorporate STTR in their tax treaty. And when STTR will be incorporated in RS tax treaty, then that STTR will enable S country to impose a tax on this interest payment, and that tax which S will impose using STTR will be equal to, so S tax will be equal to 9% minus R tax rate. What is R 9%? 9% is termed as the STTR minimum rate. So in our example, this tax rate, S tax will be equal to 9% minus 7%, that is 2%. So using STTR rule, using subject to tax rule, S will be able to impose a 2% tax rate on this interest payment. So you would see that STTR is close to the heart of the developing countries, right? Because in most of the cases, the income would arise in S country, would be which is the source country, and that is why it becomes quite beneficial for them to incorporate this STTR. Fine. So third deliverable, that is model treaty provision plus commentary, as well as MLI plus explanatory statement, they would, both of them would enable the countries to either implement the model treaty provision in their treaty on a bilateral basis. Supposing R and S want to make use of this, so they have model treaty provision and commentary, so they will simply use and they will implement this model treaty provision, which will incorporate STTR into their treaty. Supposing there's another option, there's an MLI, so there are number of countries, and when number of countries will sign, so that MLI will automatically will incorporate the STTR rule into their tax treaties. So this is a bilateral mechanism for the implementation of STTR, and then this is a multilateral implementation mechanism for STTR, but the effect would be same, that is implementation of STTR into the tax treaties. And this is the third deliverable. Now, this MLI would be open for signing on 2nd of October 2023. 2nd of October 2023. This is the third deliverable, pillar 2, right? The last deliverable, that is part 4. Okay, last deliverable, part 4. That is sort of a support or implementation framework, implementation support rather. So OECD says part 4, deliverable number 4, part 4, that is implementation support. Implementation support. So OECD says that Secretariat, that is CTP, that is Center for Tax Policy and Administration, which provides secretariat support, that has been asked by the inclusive framework to make sure that technical support and other implementation support is provided to the developing countries, so that this entire package gets implemented as soon as possible. And OECD can also, it is also being urged that OECD can collaborate, can take the help of regional and other international organizations. So they have not mentioned any international organization, but then international organization, UNO, World Bank, IMF, fine. So 4 deliverables, MLC, again summarizing, four deliverables. The first deliverable is MLC and explanatory statement for the implementation of Amount A. Second, public consultation document for Amount B, pillar 1. Third deliverable, model treaty provision plus commentary, or MLI plus explanatory statement for the implementation of subject to tax rule of pillar 2, and then implementation support. So these are the 4 deliverables which are mentioned, which are discussed in brief in this outcome statement of 11th of July 2023. This outcome statement will be delivered to the G20 finance ministers and the central bank governors of G20 countries on 17th of July 2023. So that in the next few days at the G20 summit, which is going to be held in India in Gandhinagar. Fine. So as I said, as I mentioned very explicitly in the beginning of this video, short statement, but nonetheless it emphasizes the progress that has been made till now regarding the implementation of the 2-pillar solution to address the tax challenges arising out of digitalization. So progress that has been made till now and what can be expected in the near future. Fine. So in the near future you can expect MLC plus explanatory statement, you can expect public consultation document, you can expect STTR model provision, you can expect MLI plus explanatory statement, and then the incorporation in the OECD TPG. Fine. So this is all about this outcome statement. I hope you did gain some insights and you enjoyed this video. For more videos relating to Amount A, Amount B, Pillar 1, Pillar 2, Globe Rules, there are a number of videos on the YouTube channel of International Tax Academy by Manoj Naudiyal. Do browse to the different playlists, you will get a number of videos, and keep learning international tax. And until next time, it's Namaskar. Thank you so much.